Well, after a volatile week on Wall Street, all three major indices finished with mixed results. You can see here on this graph, stocks were a roller coaster ride this week after the Feds raised interest rates. Joining us now to talk more about the markets is Dan Riccotto, finance professor at the University of San Diego. Thank you so much for joining us, Dan. Well, Dan, what exactly changed this week?
Hi, Kels. How are you? It's all about the price of money, interest rates. As you know, money has a price, and that's interest. And the Fed this week made it more expensive for you and I, Kels, and for everyone else in this country, including businesses, to borrow money. That means typically the economy will start to slow down as consumers and businesses find it more expensive to access capital. So that's essentially what happened this week. The market was spooked because they're afraid of the interest rates.
Well, Dan, the sell-off has erased $3 trillion in U.S. retirement savings. Should people even touch their investment or retirement savings right now in this bear type of market?
That's a great question. It is a bear market. It's down more than 20%. And the answer really depends on who you are and where you are in your life, right? So if you're a younger investor, like you and me, Kelsey, we have plenty of time on our side. And that means we shouldn't be necessarily fearful of these downturns, right? We've had lots of these bear markets over the last number of years, and we're going to have lots more. It's part of our normal cycle. So younger investors can actually take advantage of these. The best way to do that is to keep pouring money in your 401k, keep invested. But for older investors, those closer to retirement or worse, in retirement, these events can really be unsettling, and that calls for a whole different game strategy.
Well, the Fed is expecting to raise interest rates again next month. How could another rate hike impact the economy?
Yeah, good question. So the market, to a certain extent, anticipates that. And remember, the market always looks forward, right? It doesn't really look backwards. So right now, the market is looking ahead saying we expect more rates to go up. We also expect the possibility of a recession if we're not already in one. So the market's kind of pricing that in at the moment. That's good news for the market in terms of finding a bottom if we're close to that. But again, we don't really know because we don't know how long it's going to take the Federal Reserve to really get this inflation thing under control. And the way they do that, Kelsey, is with interest rates. So money's going to get more expensive, and that probably means a little bit more bad news for your 401k.
Dan Riccotto, we are all feeling it. Thank you for your time.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.